Hi, my name is Danya Shakfeh and I'm a business attorney in Oak Brook, Illinois. And today I'm going to talk to you about how to buy a business. Well, to start with, what is the process of buying a business? Now, it depends on the size of the transaction, but the basic steps are some sort of initial inquiry from the buyer to the seller about what the nature of the business is, the business model, the revenue, and the profits and the value of the business. Once the parties agree that they want to move forward with a potential purchase, then the buyer will issue what's known as a letter of intent or an LOI. The LOI is like a non-binding purchase offer with the deal breakers and usually has a purchase price and specifies whether the purchase will be an asset sale or a stock sale. After this point, the buyer will engage in more in-depth due diligence, what we call, which they do even more research about the business and the liabilities. They might have access to more financials and to make sure that the business is running properly and legally. Typically, the buyer will issue a due diligence checklist and requesting for documents to ensure that the value of the business is in line with what has been discussed. And then around the same time, the parties will also negotiate a purchase agreement. Now, the buyer is usually the one doing the purchase agreement, and the terms of the purchase agreement often rely on the due diligence. And then there's the closing, which is similar to a real estate closing, and these are the steps of buying a business. Is buying a business a good investment? There are multiple ways to start a business. You could buy into a franchise, you could buy a business, or you could start your own business. So that's kind of what we're comparing it to. Usually people are comparing to buying a business versus starting your own business. And the answer is it depends on the business itself, of course. One thing that you need to be careful about when you're buying a business is that you're not buying yourself a job or just buying a book of business. The kinds of questions that you want to ask to see if buying a business is worth it is to look at the profit margin, look at the liabilities. Are there a lot of potential lawsuits out there? Do the employees like working there? Does the owner of the business need to be involved in the day-to-day aspects of the business in order for the business to function? Are there clear standard operating procedures? Is there a good referral base for the business? How is the business generating leads and revenue? These are the kind of questions to see if the business is worth it. Of course, you want to compare it to something else. So again, compare it to, say, for example, starting your own business of a similar kind. And so how long does it take to buy a business? Anywhere between 2 to 6 months, especially if there is financing involved. If a bank needs to approve a loan, that will add to the time. It usually takes about 60 days for loans to go through and for the parties to do their due diligence and negotiate the terms and do their research. And then more complex deals take up to 6 months. Now, who should you consult when you buy a business? Of course, you want to consult an accountant to review the financials, specifically an accountant who has experience in buying businesses and who could understand profit loss statements and can understand profit margins, who can compare the tax returns to the profit loss statements and to make sure that there's no money being unaccounted for, let's say. And of course, you want to consult a lawyer, and depending on the situation, you may want to consult a business valuator. And I would also say, especially if it's a higher value business, a business coach, to make sure that the business operates in a way that's seamless, and again, that you're not buying just a job. And how to finance the purchase. How do you finance the purchase? Where do you get the money to buy a business? Of course, you could buy cash if you have savings or if you have access to the cash, that's great. You could also take out a loan. You could take a regular commercial loan, or you can take out a small business loan, and that's known as an SBA loan. You could also do a seller finance deal, or you could do a deal where there is an earn-out agreement. Now, the earn-out agreement is similar to a seller finance deal where the seller will just agree to accept payments over time. The earn-out agreement might have certain benchmarks depending on how profitable the business is after the sale occurs. And that's the basics of how to buy a business. If you have any questions, or if you would like to learn more about buying a business, or if you're looking to buy a business, you can call us at 630-517-5529 or email us at danya@motivalaw.com.